Hey guys, it is Mark Coe for the 8th of May. Just wanted to take a look at a couple markets here today, specifically the ones that were a focus last night on Twitter. So I just want to show you Twitter and show you kind of where the bias is coming from. Um, Bias changes here. So this is written yesterday. This is for Tuesday. So crude oil was sell bias, short as long as this top edge is maintained at 85. E-minis short trade as long as 2181 holds. None of those had any issues holding today. So that was the idea that those were going to stay directional in that direction. Pound dollar was buy side. Would have looked at stops below the 3,500. Did not achieve target, but has rallied a bit. And gold stops below 1305. So let's just take a look at those markets with that in mind. So first off, pound dollar. The idea was long bias coming into Tuesday, the 8th of May. And again, I'm just looking for short-term edges, and ultimately that edge is created right around the 35 level. As you can see, the way I'm drawing these levels, it comes from the most recent action, and that's what's so impressive about the levels is that you're using market generated information. You're not using opinion. It's very objective. So that's simply what I'm marking. I'm marking the lows that were created on Friday. That's where that mark is coming from. So again, the bias is created with the tools I'm using, but I wanted to show you how the levels maintained. So trade action down into it. Remember I talked about having stops below 3,500. Again, never really challenged below Friday's lows. The idea purchased down into that rally. So it only gave about a 50-point rally. But again, 50 points in the pound from good levels, it's still worth $500 on a standard lot. I mean, you have to realize what's really there. It's a tight market. It's counter trend. There's not a lot of movement, but it's still a really good area to act and a very controlled risk reward. And again, dealing against that level got it even tighter. I mean, it maintained that right to the bottom edge. Let's take a look at E-minis. The idea today was E-minis, sell E-minis at edges. So what I teach in the course and what I teach in the room talking about edges, there's definitely higher edge up above 80, but this is the most recent Tuesday edge. So the idea was E-mini sell side action. So again, this is early European sell-off, trade right back into it. So 2670 trades 2652. That's 18 S&P points. That's a $900 move. Again, the idea is not saying I'm top ticking, and I'm definitively not top ticking. This level here is about 2671. We traded to 74. The idea is you're not wrong until above 80, 81, so you're going to be above yesterday's highs. This was just the first level to deal on, and it was a good reaction. I mean, 18 S&P points. You can see back end of day we're challenging that level again. But again, 18 S&P points, $900 per contract. That's what was there in the move, right? That's what you have to think about. What can I pull out as a trader? And I'll tell you, my focus really becomes prior levels and prior breakdowns. It would be really from the viewpoint of looking at bottom edge support in this section. So I wouldn't have necessarily targeted the lows. But movement down into 57, 58 is very doable. So that one looks a lot more like a 12 to 14 point type of rotation for pretty decent reward, not necessarily bottom tick. So you're talking $600 to $700 per contract is a lot more doable. And finally, let's look at crude oil. Crude was very exciting just because you finally got the announcement of pulling out of the Iran deal, and so crude was all over the map. However, our map was pointed in one direction. It was pointed lower, and it was pointed lower from edges. Now, this is yesterday's breakdown. Bottom edge, break, tap back, tap back, tap back, all with the idea that you're looking for movement lower. Why? Because the bias is lower. That's why. Ultimately, this trades off of 70-20. Now, again, I wouldn't be telling you bottom tick, but definitively down to consolidations, you have to acknowledge that that is a massive, massive move. You're talking 200 ticks. That would certainly be beyond what one would consider just normal movement, but nonetheless trades level to level, and that was pretty impressive. Again, back to it later in the day, back lower, back to it toward the close here on a Wednesday. Now, I mean, I don't even want to talk about the amount of money that was there, but it was thousands on one contract. That's talking about dealing from the levels. It's not implying that you're taking every tick. What I keep talking about when I'm talking about the money is what's there in the movement from the level. So walking through it, you have pound dollar sitting with basically a $500 gain. You have E-minis roughly in the $600 to $700 range, and then crude oil well over 1,000 to, let's say, even be ultra conservative and call it $2,000 of movement. That's what's there. And so what you start to think about is, okay, on a daily basis for this course, for the $500 for the year, there are days where I can see thousands. It's a pretty nice little setup. And again, a lot of it is the approach. A lot of it is consistently finding a way to deal against the levels. And then a lot of it too is being pointed in that biased direction and understanding, hey, I'm going to deal from the edge. I'm going to stop chasing the market. I'm going to deal from the edges. So anyway, I hope you guys had a good day. I hope it was profitable. And keep focusing on the edges. They're there. They're there every day, every week. Some are going to rotate further than others, but again, the idea is to put yourself in that position, right? It's not the idea of saying, I know that this top edge is going to hold. I don't know that. What I know is that's where I'm willing to look to deal, and if it holds, I'm looking for rotation, right? That's what I know. It's not about saying, I know this resistance level or I know this support level is working. What I'm using is market generated information. And then, as I said, I'm using bias tools and timing tools to kind of hone in on that area. And that's ultimately the approach. So cheers. Hope you guys have a wonderful Tuesday, and we'll see what the rest of the week brings us.